Good afternoon and welcome to the first Share Series hybrid event. I'm Cristina Fernandez, Senior Analyst at Telsey Advisory Group, and I have the pleasure of interviewing Clarence Smith, Chairman and CEO of Haverty. We'll start with Clarence saying some brief overview of Haverty, and then after we're done with our Q&A session, we'll open it up to questions from the audience. With that, let's get started.
Well, thank you, Christina. Thank you for being here today and having us. Haverty's is a branded retailer out of Atlanta, Georgia. We operate in 16 states from Virginia to Texas. We've got 123 stores. We target higher income, middle high, and then higher income customer. We've tried to separate ourselves from the promotional players over the past several years, upgrading our product, hiring designers, doing more custom. So that's how we feel like we fit in the marketplace. And we're located in what we believe are the best states in the country.
Great. So let's start talking about the state of the industry and the consumer. We know home furnishing saw great demand during the pandemic. The housing market slowed a little bit since then. How are you seeing the consumer and demand for home furnishings?
Well, as you would guess, we did have a surge post-COVID, which surprised us. We had two record years in a row, last year and the year before, over $1 billion. We announced at our earnings for the fourth quarter that our written business or incoming orders is softer. It's down. And for the year, it was down or almost 10%. So we're not seeing improvement. We will give more numbers when we release in May, but it's definitely a softer environment for furniture. We're tied very closely to housing, and housing is softer, as you know, based on the interest rates and how that's affected it. So it's softer, but we think we're going to be able to maneuver through this.
And you mentioned earlier the states you are in. Can you talk about more about how the consumer is in those states, and how do you feel like the housing market is holding up in your key markets?
Well, our biggest state is Florida. It's 25% of our stores. We've got over 30 stores there, then Texas, then Georgia, then the Carolinas. And this is where most of the people are moving. We feel very good about where we are, the positioning there, and I think that those customers are a little less sensitive to the overall environment. If you're moving, for instance, from New York to Florida, which a lot of our customers are, they're buying new furniture. The furniture, they don't want to move here, move from here and they want to have the styles that is appropriate for the Florida market, and that's why we do so well there, and others do too. So I like our positioning, and I think that we can grow from within this footprint.
When you look at the drivers of demand, and I'm thinking about housing metrics, like, us analysts place a lot of emphasis on existing home sales. We're looking at the data. But when you look at, your company, what do you view as the main drivers, and what housing data do you track more closely?
Well, the best indicator historically is new home sales in the South. We do look very closely at existing home sales, which is actually a little better right now. But if you look at the housing sales you've seen around the country, it's down, but in the South, it's down very low. So most people are moving here. We talked about that. So new home sales in the South, definitely the interest rates and how it affects housing overall, that is probably the best indicator for us.
Another topic I wanted to talk was promotion. So we look at the industry, particularly at the lower to mid end of the market. It's been very promotional, and that has continued. What level of promotions are you seeing in the marketplace? How do you view inventory for you and for the industry?
The industry did get in trouble, particularly in the promotional end of upholstery and also bedroom and dining room. There were people who would buy whatever is available because we couldn't get it. We were very disciplined in that, and we're not in any kind of inventory issue right now. We feel very good about our balance and our mix. The promotional players, the discounters, are underneath us. We do not believe in price discounting as far as percentages off, which is a bad habit of this industry. What we do is use credit. Free credit is more important for our customer than the discounting. It's only about 35% of our customers that take advantage of the credit, but it does help us drive the business. We are being more targeted with that. We're using it less often than we did before, and more targeted around holiday timing, which is the most important time back to historic levels with the furniture industry. After COVID, we could sell all the time, anything you wanted. Today, it's back to more around the holiday times when most people promote and most people are in the furniture, in for the market.
Just for people who don't know the home furnishings industry, what are the key holidays or what are the key time periods during the year when consumers buy home furnishings?
Well, it starts with Washington's birthday or President's Day. Then you've got Memorial Day, which is the most important event of the second quarter. Then 4th of July, which is not quite as important. And the most important one of the year is Labor Day, and then after Christmas. After Thanksgiving. So those are the important events, basically one in every quarter. And it does affect the quarter somewhat about how the incoming orders are and how your deliveries are based on when that holiday falls. And we promote around 10 days around that holiday day.
Before and after. Another topic I wanted to talk to was about pricing. So pricing, we know there's been a lot of inflation in the industry and across all of retail. How have your prices trending and how do you see those prices holding up as we move forward?
I started the conversation with, we're a branded retailer. The product that we're selling isn't sold elsewhere other than some of the mattresses. So we have been very disciplined about raising our prices when the prices go up and adapting to whatever the market is at the time. We do not believe in discounting. We believe in achieving our gross margins, and we're disciplined in making that happen. And I think that will continue to happen going forward, even with the pricing pressures. Now, we are seeing that manufacturers today are lowering prices. They raised them, but now it's coming back because getting the orders is tough, and we're doing a better job, and prices for freight is coming dramatically down, which will help us in our gross margins because we are on LIFO, which hit us bad last year. This year, we think it'll be a positive.
The last question I want to talk about the environment is about competition. Who do you view as your key competitors?
The people who do the most business in our markets, let's just talk that way, are Ashley and Rooms To Go. They're the big players, but they're in the promotional lower end of the market. I think we've moved into the consideration set of even Restoration Hardware, but certainly Ethan Allen, Pottery Barn, Crate and Barrel. We are now in that framework, and I think those customers look at us. And one of our advantages there is that we manage all our own delivery, all of the back end. We have a broader mix of product, and we can move faster than they can in fulfilling the customer. So as we've upgraded, we've moved more into design, more custom, and more special order. And by the way, this year, our custom is up dramatically over last year. So we're continuing to gain in that end of the business, which I think continues to separate us from the promotional players.
I want to shift gears and talk about your company-specific initiatives. You have a few of them that are really interesting. First one is your new store target. You've talked about opening about 5 stores this year, which is more than what you've done in the past. So can you talk to us about, what markets are you looking to go into and, eventually what's the opportunity to expand the store base?
We think most of our opportunities are in our existing distribution footprint. Now that can reach a couple of more states, but we've got a lot of markets that can handle more than 1 or 2 stores that we have today, and that's what we're doing. We just opened up a store in Durham for Raleigh and that area, which is an additional store. We opened one in Northern Virginia. So we think there are going to be great opportunities to fill in our markets. And you've asked me in the past, how many can that be? I think it's probably 5 a year for 5 years we feel comfortable with. 25 stores, we know those opportunities are there for reaching markets where we're not penetrating now that would help us grow our business. We do best when we're in areas where people know who we are, and we want to leverage that. So I think we can continue with that. We're open to let's just say small acquisitions in the sense of taking over retail boxes. We're very good at converting retail boxes. We've taken over smaller, let's say, linens and things, or the different electronic stores. We like stores in the footprint of 30 to 35,000 square feet. We used to have about 50,000 square foot as our model, but we've learned that we can do just as well or better in that size market, that size store, using the electronics and using the internet and just leveraging the special order and customization. So we don't have to have the big format stores. In fact, we've got some in the 20,000 square feet range, 20 to 25,000, that are some of our best producers. So there are more of those opportunities. We want to convert existing boxes to us. We will build a few stores, but only when it's necessary to get into that marketplace. And that would probably be in Florida, where there's new development, and that's the only way in. But we just think there are opportunities for us to grow. We spent over $100 million redoing our existing footprint, and we don't need to spend more there. We feel very good about where we are. We don't have many stores at all that we want to relocate or close. So that's why we're now in a growth opportunity, and we've got the support and the balance sheet to be able to.
And are you finding the right real estate locations for the stores you want to operate? And I know just recently you hired someone to to head up real estate. So do you have the resource internally to be able to to accelerate store openings?
Well, yeah, we just brought in an investment banker who we know quite well, Katie Mendelera, who is going to be in charge of all distribution. All real estate and also development. So she brings a whole new skill set to us. Just joined us. We know her quite well. She was our banker for almost 5 years, and she knows the business quite well. She represents a lot of the different retailers we just talked about. So we are now positioned to do it. We're dedicated to investing in growth, and we think there are going to be opportunities for us, for these landlords that want to have a credit tenant like us on those leases.
And another area I wanted to discuss was your merchandising and products. Can you talk about what are your key product categories, and are there any where you can expand? I know in the past we've talked about outdoor potentially being an opportunity. So as you look at the entire home furnishings market, are there any ones where that you're not that strong in, or that you haven't really participated in, that you could do more?
Well, let me just start with where our strengths are. We do almost half of our business in upholstery, 40-something% in upholstery, and that's the fashion part of the business. It changes that all the time. Our bedroom business has been very strong today and currently, and it's backing up from all the post-COVID issues of getting the product. We're now bringing that in. We're very strong in case goods, in bedroom and dining room. Most of this industry, like the department stores, they push upholstery because it's something they understand. We're very good in all of the case good businesses, like office furniture, which is weak in most of our competition. We're very strong, as I said, in bedroom and dining room. So those areas are important, and I think we'll continue to gain share there. Outdoor. We tried that several years ago and did it poorly. We're now beginning again with a new program beginning this spring, and it'll be in about half of our stores. We're going to be much more specific about where it is. The problem with outdoor furniture is it takes space from upholstery generally, which is your most important category. So we have to be careful about how we place it and where we place it. And we like the lineup that we've got set up, and I think it'll be a good addition for us in an area that we don't do business. It might be only 3 to 5% of business, but that's new business. And I think how people think about outdoor today has changed in the homes. It's almost like a living room, and a lot of people use it as living. So we know, particularly in the South, it's important, and we will be a player in it, but we'll go slowly, unlike Restoration Hardware and their new book. I don't know how they execute that. We want to make sure we can execute.
Right. No, that makes sense. I would just think, like, especially in a market like Florida, some of the ones you're in, I know how
we
important
need,
outdoor is.
Outdoor is important actually everywhere now. So, but Florida's the most important.
Another initiative that you've had for a couple of years that I think has been very, instrumental to your company has been the interior design business. Can you talk about kind of how you do it, that perhaps a little different from others, and how it has helped drive sales and ticket?
Yeah, we actually started this about 8 or 10 years ago, knowing that we needed to separate. And at the same time, we upgraded our product. It's now 25, almost 30% of our business. It's driving our average sale dramatically. Our average ticket in our stores is like $3,100, $3,200. If we get in a home, it's over twice that. So it's driving our average sale. It's driving our closing rate. And the way we do it is we have a designer in the store who partners with the salesperson. So it's a two-man transaction and team. So if you come in and you ask for design, or you just start acting like I've got a new home, they'll say, would you like to meet our designer? And once they introduce you to the designer, the two of them together help work with you, and we pay both of them. Now, the designer is mostly on salary. The salesperson is mostly on commission, but it's a mix that has been successful. We believe in it, and I think the teamwork transaction works very well with customers.
In I think the past you've said, if I recall correctly, it's like 12, 13% of customers use interior designers. Is that correct?
Yeah, that's about right. Yeah. And we don't want to force it on anybody. We don't want to be known as a design house. That's not who we are. But we do want to offer design because most people need some help and want some help, but they're scared about asking for it. So we think this arrangement has made it something that's more comfortable for our customers.
Great. Another area, and you alluded to this before, but I wanted to talk about supply chain. So we know ocean freight costs were really high in 2020, 2021, started seeing some relief late last year. I guess, how did that impact Haverty's, and how much of a benefit or how substantial the benefit it could be this year?
Well, it was outrageous. I mean, you heard $30,000 per container kind of talk, and we had some in the high 20s, which sometimes is higher than the cost of the product. But we brought it in. Now, what we've been able to do is work through that. And we think that most of that is behind us. We've developed very strong relationships with the ocean freight players, and they want to deal with us. And now the rates, even though we've negotiated rates, we're now looking at it every quarter to renegotiate the rate because it's coming down dramatically. And we're now seeing from Asia rates in the 2,000, 2,500, even less than that. But we want to deal with these partners who've been loyal to us. They will give us rates and make sure we get the product. And it's a strategy we've had that I think is a strength. I think we operate with more integrity than a lot of our competitors, but also just making sure we make it happen. We've been more disciplined in buying the product and flowing the product. And I think that's starting to show in the margins that we have, and the fact that we've been able to fill these back orders as efficiently as we can.
And from the consumer standpoint, I think after you reported, I heard from a lot of other home furnishings companies, and it seems like across the industry, backlogs have come down. Lead times are kind of normal pre-pandemic. So if I were to place an order for Haverty's today, how long would I have to wait to get a product, and how does that compare to before the pandemic?
I'd say that is good or better than it was pre-pandemic. And that's not only domestic, but it's also overseas Asia. So we're getting the product. They're scrambling for orders. Everybody needs orders. If you were going to do a custom upholstery, it would be 3 to 4 weeks shipment, where in the past it might have been 6 months. I mean, it's back to pre-pandemic or better for a lot of our, particularly domestic supply. So we feel good about being able to fulfill orders. That's not going to be the issue this year. And I'd say our back orders are settling down to probably by the end of this quarter will be roughly equal to where it was pre-pandemic.
And within the supply chain, are there any areas that are still like a pressure point? I know like trucking, like those are still
Trucking
elevated.
would be the if there is an issue, it's trucking, domestic. But we talked to our supply chain leader, and he said that it's not really a problem right now. That would be the one area that would be the toughest, but we're getting the goods in a timely manner.
And for those who don't know your company as well, can you talk a little bit about it? Because I think your infrastructure is actually, one of your advantages. So talk about like your delivery infrastructure, your warehouses. How do you do it? That's unique.
Well, we think we're particularly unique in the fact that we control the entire process. All of the warehouse and delivery those are our team members. Those are the people that come into your home. When you buy a product and you set a delivery, it'll be up on the screen and tell you who these drivers are, what their names are, what time they're going to be there. You can track the truck. And if there's an issue, you can talk to the store, and these people report to us. So I think it's a significant advantage in that most of our competition deals with third-party carriers. Most anybody you name is a third party. They outsource it. We don't believe in that. It's hard. Delivering furniture is difficult. It's easy to damage. You can damage the wall. It's an emotional purchase. All of that's so hard to execute. We believe in controlling that whole process. And I think that's going to be part of our brand that we carry forward.
Let's shift gears and talk about profitability. This is probably like after demand, the second question I get from investors is operating margin and profitability. For a lot of companies, including Haverty's, profitability today is much better than it was pre-pandemic, around double digit versus mid-single digit before. So can you talk about what structural changes you make to the business that give you confidence that this higher level is sustainable on a little bit of a tougher environment?
Well, pre-COVID, we had 3,500 team members. We cut it to 2,700, 2,800. And we changed our hours. We went to 7 o'clock to close. We're not going back to 9 o'clock. We now we've reduced that about 100 people. So we have about 2,700 people doing $1 billion, where we had 3,500 people doing $800 million. And we're not going to add to our team. We're going to adjust to whatever the business conditions are. But we have an objective, Christina, you know this, of being producing double-digit operating profits. Can we do it in a downturn? We're not sure, but that's our objective. And we're going to adjust our costs to make sure we can do that. And one of the things we've been particularly disciplined in is our margins, our gross margins. And you will see that continue to be a strength. We know that we can get those margins, and we know we're going to be disciplined about it. We know we're handling our product better, and won't have the markdowns we might have had in the past or the closeouts. So the first part of that is a gross margin that can help us maintain that double profits. And we're going to adjust our cost and have to whatever the conditions are to make sure we can have that as our target.
And, we know right now the orders are moderating a little bit, but still manageable. if, who knows what happens the rest of the year with the economy. Obviously, it seems like views change constantly. But if the environment gets worse, where can you cut costs to try to,
Well, most
hit
of
your
it would
targets?
be in warehouse and delivery and attrition, which there is more turnover there. We have cut pretty dramatically in our stores. I don't, there'll be some that we can adjust there. We would not hire as many people in the home office. And I will tell you that in order to hire anybody in our home office, I have to sign off on it. So even if there's a replacement. So we're very disciplined about that and controlled in that. And we're a public company that wants to be producing for our shareholders. And it's a combination pricing, discipline, cost discipline, and driving our business.
And on that topic about hiring, I don't think I've asked you this before, but we know the labor market's still a little bit, it's still tight. When you need to find people, are you finding it, or are you having to pay more?
It was awful a year ago, and now it's not. We're not having a problem. Warehouse and delivery, we can fill it. We've got people placed there. I would say finding the right decorators is a bigger challenge, but it's only a handful that you're talking about. So no, I don't think that's going to be or is an issue now. It's changed overnight.
Mm-hmm. Yeah. Last section or last topic I want to talk to you about, and I know this is really important to you, and you alluded it, is your focus on shareholder returns and capital allocation. You've paid a dividend for a very, very long time. Can you talk about it?
Since 1935.
Probably one of the longest standing.
Yeah. By the way, we went public October 8th, 1929. We're one of the oldest public companies. We survived that. We were lucky. But yeah, we've paid a dividend consistently. We've raised it every year since, I think, 2009. We even paid during the Great Recession. And we believe that we want to increase it every year if that's possible. I think we've done that. Every now and then we do special dividends because we do generate a lot of cash, or have, and we do have a lot of cash. We did announce last week we bought back one of our warehouses because we believe in it. It was a warehouse in Florida, in Central Florida, that we had built, and we sold it along with two others during the depths of COVID. And we've actually now bought two of them back because we want to control that product of our business. And this being in Florida makes it even more important because that's our biggest state, our fastest growing state, and it's right there on the distribution corridor on I-10. So we're very cautious about maintaining a no debt position. We don't think that this industry can handle leverage, and we are not going to get leverage and don't need to generate cash and support the business that way.
And the last question I have is, where are you investing in the business, and what are the key sort of areas of capital, not capital employment, but capital expenditures?
Well, you've heard about the website. We're spending a lot of money redoing and fixing our website. It is new. It's great. It's not everything we want it to be. We want to be able to maximize it and get more information and more data about our customer and give her back what more she needs there. We're investing in supply chain. We've just upgraded our system with GT Nexus. So pack and ship is done so that all that information of product being shipped from Asia, we know exactly what it is and when it's going to be. We've invested heavily in our whole internet and our system internally. I think we've got some of the best systems in the industry for tracking the product, taking care of the customer, and making it easier for our customers to sell. So we're retailers. We want to make it easy for people to deal with us, and that's what we're investing in.
Well, those are all the questions I have. Okay. Let's open it up and see if anyone, does anyone have a question? Yeah, please do.
how much of it is what? Okay, most of it was in China. We moved all of the wood to Vietnam. So none of the wood furniture, which was mostly made in China, it's all moved to Vietnam. We do some leather, particularly upholstery, motion leather upholstery, and more of that's moving though. And most of those factories are trying to move to Vietnam or even Cambodia and some into Indonesia. But we still do business in China. Yeah, we brought in a new marketing lady several years ago and brought in a new agency, EP out of Greenville, South Carolina. They were formerly in New York. We do no print. We used to do a tabloid every week like you used to see in the newspaper. We're not in the newspapers. We do no catalogs. We do no print. We do over-the-top television, which is not directly broadcast. We do some broadcast, but it's over-the-top, a lot of digital, a lot of social, and that's mostly what our mix is. We do not do tabloids. We do not do catalogs. We don't do those thick books. We're targeting our customer where she is and trying to get her the information she wants about our product to help us fulfill that. It's about 5.5% of our business, of our cost, is what we invest in advertising.
All right. Well, I think we're out of time. Thank you, Clarence, for joining me. Always
Thank
a
you,
pleasure
Christina.
to host you. And then next up is Fiscal Note. Thank you.
Thank you, Christina.